Good afternoon, everyone. Today I'm chatting with Craig Hempy from TF Metals Report. Now, guys, I thought it would be a great time to have Craig on because there's been some confusion over at the COMEX in regards to some of the open orders that exist for physical delivery. In this interview, we get into the tariffs, what they could mean for the U.S. economy, as well as how it could impact precious metals as Trump continues to butt heads with China. We also get into where precious metals could be heading this year. And Craig offers us lots of insights and things to think about when trying to evaluate the macro precious metals environment. All right, everybody, enjoy the interview. Craig, it's good to see you again.
Steve, it is always fun to get caught up. It seems like it's been a while. You guys are busy. I'm busy. Everybody's going all these different directions. So I'm glad we got a chance to visit.
The way things are moving right now, it's wild. I don't know about you. Every morning and I don't know if you are enough of an insane person like I am to actually turn on CNBC, but I turn it on every morning, and they are acting like it's the end of the world right now, that Trump is basically conflicting self-harm on the US economy, and the US will never recover from what's happening. And that's talking head after talking head. Peter Navarro was on their panel yesterday morning, and they were letting it be known to him that they were unhappy with the policy decisions of Donald Trump. I'm curious here, what's going through your head when you think about what Donald Trump's doing in terms of his economic policy?
Well, that's a long answer. I have found over the 15 years I've been running the site, I've become a bit of a populist in a sense. You can't look at the income disparity and the wealth disparity in the country that really traces back to 1971 and then, wage this battle that I wage for sound money and against the banks and everything else and not kind of become a populist. Look at the economic data every month, and you see whatever it is, 65% of American citizens don't even have $500 saved, that kind of stuff. And people trying to, the jobs that get added are part-time jobs versus full-time jobs, and people are just trying to make ends meet, right? So it's really hard to do what I do and not kind of feel that way. And so I kind of get where they're coming from. You listen to the Secretary of the Treasury, Tucker Carlson, last weekend. I see where they're coming from. I just think, in my way I look at it, I think it's misplaced. I mean, if you're worried about the trade deficit, right? Isn't that a capital account surplus, or not? Maybe not capital account. What's the term they use? Anyway, if you're bringing dollars in, or you're shipping, right? So we got to address that. I mean, if you really want to get to why we have such a massive trade deficit, why jobs have been shipped, manufacturing is shipped overseas at such a rate for the last 50 years, it's because of our debt-based monetary system. We create all the dollars here, right? And if they stayed on our shores, we'd have this massive inflation that you get in other countries that just have their own, non-reserve currency status, fiat currency. But we ship them all overseas. And countries buy our, they manufacture it there, we buy it, they end up with dollar, account surplus. It gets remanufactured or recycled back into treasury market and all this kind of stuff. So anyway, to say that you're just going to do this with tariffs, I mean, that's just not. Now, look, I got an economics degree 35 years ago, so from the prestigious University of Nebraska College of Arts and Sciences, right? So it's not like, okay, I'm like just got out of Wharton and I can actually talk about this stuff. But to me, I think it's misplaced. And I think it's a gigantic risk politically that they're doing. Academically, can you say, yes, we are going to increase these tariffs and it's going to make them do this and them do this. But Steve, it's game theory, man. There's 100 plus, who knows how many other variables that can impact all these things. And so, sorry, I'm waxing on and on here. You can also maybe over time you get some plants coming back, and manufacturing coming back and all that stuff over time. I don't know if politically you have that much time. And the only other point I'll make is that, I had to study the Smoot-Hawley tariffs back at that venerable institution. from which I graduated. And those kind of came into being in 1930. I don't think anybody thinks that they helped end the Great Depression any sooner than would have otherwise happened. All right. The degree to which it made it worse, okay, that's a good academic discussion. One thing I can tell you, though, Hubert Hoover of the Republican Party was the president when all that happened. And after that, there wasn't another Republican president for 20 years when I got elected in 1952. So, I mean, there's a little bit of a political playing with fire here, too. So, anyway, it's a long answer to what you probably thought might be a little more simple question.
Yeah.
But it's a lot more complicated. And so good on CNBC for at least trying to get people thinking more than just about the moment.
And it's interesting too when you watch them, because they're always trying to bend their thought process into a pretzel, trying to figure out what's happening. Where, like what's Trump's ultimate game plan here? What's the strategy? And from what I can tell, and just before we went live here, the announcement came out that now the U.S. is talking about, as of midnight tonight, 104% tariffs on China. 104. And this is going to piss a lot of Americans off, because they got rid of, I believe it's called the de minimis rule in the US, which previously made it so that you could order products off of, Alibaba or most of the Shopify stores, and you didn't have to pay any tariffs on that. That means that anybody who's ordering a product, whether it's a t-shirt, a set of Christmas lights, a vibrator, whatever it might be,
right?
You are now going to pay double the price for that product in the US.
Yeah.
And just kind of listening to Peter Navarro yesterday and trying to wrap my head around it, and just kind of like, what's the root of everything that's happening here? It sounds like it's really about China.
Yeah. And again, other than reading a little Sun Tzu back in the day, what do I know about the Chinese and how they operate and Xi and all that stuff? However, they always say you got to give them an off ramp. You got to let them save face, right? I mean, has that appeared yet? Or is it just like, we're just going to keep up in this until you give in? Well, that may not be necessarily the direction they go. I'm watching that offshore yuan, which is pegged to the dollar. What if the Chinese say, and I have no idea, I'm not going to try to connect dots and go, so then this will happen next. But what if they devalue that peg to a different number? Is the U.S. preparing for that? Have they planned for that? Have they game theory that? Have they war game that out before just, now we'll go to 104? I don't know. I'm not saying, maybe they have. What I'm getting at, though, is back to what I mentioned earlier. Yeah, academically, you think you can just raise tariffs, that's level the playing field, it's going to raise billions and billions of dollars that we can use to fund our sovereign wealth fund or whatever. Academically, great. In practice, you just don't. It's like, remember, like they always talk about actual kinetic war, you get the unknown unknowns that begin to develop once a war starts, or like the old Mike Tyson thing about everybody's got a plan until they get punched in the face. Yep. You just don't know. And so that's what I think is very wise. Look, I'm not here to give anybody financial advice, but it is a time to be cautious. Maybe. Nothing wrong with sitting cash making 4%. That's for sure.
Now, I know I'm kind of throwing random thoughts and news.
That's all right.
And just asking you to kind of talk off the cuff about this stuff. But Kevin Bambro, I don't know if you've seen him on Twitter, but he made a fantastic post yesterday talking about how people say that the U.S. economy is bigger than China's economy. And he breaks it down by various resources and assembled products. If we look at electricity, China uses more than twice as much electricity on a terawatt per hour basis than the U.S. Automobiles, China consumes 3 times the amount of vehicles that the U.S. does. Steel, China consumes 1 billion tons a year, while the U.S. consumes 86 million. So that's more than a 90% gap. Cement, 2.2 billion versus 100 million. I can go on, and he's got a whole list of them that shows that China's economy, if you actually break it down by resource, is much, much bigger than the American economy. And it's almost like we're sort of playing this game with China where perhaps we're kind of thinking about it in US dollar terms, and China isn't really thinking about it that way. And then you also hear these mumblings, and you might be able to speak to this, that China has quietly assembled a massive amount of gold, and they might be 3 steps ahead of the US already, especially when you look at it in terms of consumption of resources and products. They're way ahead of the US. Do
Right.
you think it's possible that we are actually looking at the unwinding of the US dollar as the world's reserve currency?
And some extra competition from China. I think anything's possible. I think what's not possible is the idea that the Chinese just woke up on Thursday morning and went, I almost did a Chinese accent for you on that one. Holy shit, that kind of thing, right? They've probably been thinking about this as an eventuality and preparing for it. And again, the US, I don't want to, again, I'm just guessing and speculating and taking what I've seen and thinking about it and pondering. And I watched that interview. I asked everybody on my site to watch the interview of Tucker Carlson and the Secretary of the Treasury. Seemed like it was recorded maybe last Thursday after all this happened, then it was posted on Friday. And Besant said, and I'd never heard anybody put it this way before. And Tucker kind of filled in the blanks with the metaphor, but Besant made it, remember the old the idea of, you owe the bank $1 million, you've got a problem. But if you owe the bank $100 million, the bank has a problem.
Yep.
That's kind of how Besant framed it. He was like, they need us a lot more than they think they do. And so therefore they got to come to us if we start. And I'm like, maybe,
Or
but
because
maybe,
because I look at these numbers here, and that sounds like hubris to me.
yeah,
Like
exactly.
who's like, if they go and dump all of these treasuries that they have, and there's this idea that they need US dollars, but they own uh mining resources around the world now. Why
Yeah.
why can't they continue to just bring in all this resource that they need? I understand that there's a digital argument to it, but they have basically demonstrated that they don't give a shit about intellectual property rights. And
Right.
they just go and reverse engineer everything that the US does. I like from my viewpoint, it looks like this is the real battle that's lining up here.
Yeah. Yeah, it's not, and again, that's what we've been getting at. This is not as straightforward and academic and, "Oh, this is easy. We do this, then they do that, then we do this, and we win." I'm a little more guarded than that. To get back what you mentioned earlier, there's a guy I first met 10 or 12 years from now. I haven't talked to him in years. Jan, whatever his last name is. He used to go by Coos Jansen, just like I used to go by Turd Ferguson. And he was a guy living in Amsterdam, I think is where he was from. That he studied the Chinese markets, the gold market extensively, and concluded years ago that they probably had at least 25,000 metric tons of gold. And they tell it's about, they tell everybody they got 2,000 something. So it's like 10
Yep.
times as much. And it wasn't like he was just pulling numbers out of his butt. I mean, he actually I don't know. I don't even know what like I said, I haven't talked to him in years. Let's just say they do.
Mhm.
And they just not telling, because everybody assumes they do. So let's say they do, and say they take some of their foreign currency reserves that are, like you said, mainly held in treasuries, and say not only do we have 25,000 tons, we are a buyer at whatever, pick your number, $5,000 an ounce, $10,000 an ounce. Well, how would that change the global order? And then not only that, we don't need the dollar anymore. We'll just stop trading with you. And now we're going to have demand for our currency because we're going to partially back it with gold or whatever. All these things that we've all pondered for over a decade. So anyway, I get, moral of the story is, I don't think, you say hubris, that's a good word for it. Arrogance, I don't know. I don't know how hubristic or arrogant they are, but they sure seems like it is. In just assuming that everybody's just going to bend to your will because, we are the almighty US. I don't know about that.
So the real reason that I wanted to have you on here, and I
My
mentioned this,
rugged good looks.
well, of course, But what was happening is it referred to as the COMEX or COMEX?
The commodity
No, but
exchange,
yeah,
but
what do you say the COMEX or do you say COMEX?
the COMEX, the
Okay, yeah,
exchange.
that's how I. But
Yeah.
anyways, besides the point. The point is this: that there was a lot of talk online. You were vocal about it on Twitter about these open contracts that existed for gold deliveries on the last day of the trading cycle for the April contracts, which
Mhm.
I'm going off the top of my head here. I should have it up in front of me. I think it was like 106,000 contracts or something, some kind of number like that, which worked out to like in the tens of billions. Might have been $40 billion worth of physical delivered gold. Everybody was looking at it going, "Oh, what's happening? What's happening?"
Right.
And then my understanding is a few days later, the COMEX, they came around and they said, "Well, it's actually just an error. There's not that many contracts that are open." What do you think's happening here?
Well, I think it was an error. But boy, it got my attention because whether it's due to tariffs, whether it's due to just a simple repatriation of as much gold as you can get here, whether it's just people coming here for gold, US for gold, because it's a 8-week queue to get gold in London, whatever it is, the February contract for COMEX Gold, which is one of 6 as we go through the year every other month, considered a what they call a delivery month. The February contract set an all-time high record for the amount of gold allegedly delivered. 76,000 contracts, almost 7.7 million ounces. Okay, so we're all waiting now for April. And when the April contract went off the board at the end of March and into its delivery phase, the original number is like 55,000 or so contracts still open. Back in January, when that February went off, it was like 59,000. So it's like, okay, this is a continuation of this trend. People showing up in the US wanting immediate possession or delivery or whatever of whatever they're getting. So anyway, the first report, they put out 2 reports a day, the CME does. One is a preliminary report, says here's our original numbers, comes out about 1 a.m. New York time. And then there's a final number once they reconcile everything. Well, the preliminary report was 55,500 and whatever. Then all of a sudden, a new report came out that said the final report said it was 106,000. And what? I even got on the phone with the CME immediately. I went to their website, found a phone number, hit a couple of numbers, found a guy who said, yeah, let me check on that. Puts me on hold, checks, comes back a couple of times. 3 different sources in their data feed said, yeah, 106,000. Huh. Big, huge jump in platinum that was also entering delivery month as well. Maybe it's legit. Well, guess what? By the time we got the very next day's preliminary report, we were back to 50 some odd thousand. The math worked that was just an error. Now, probably was. I think kind of Occam's razor holds sway on this deal. The simplest explanation is somehow something got corrupted within the system. Some other part of the system picked up the same number and it just got reinforced, and that's why it showed up in 3 different spots. The math seemed to work in terms of how many actual deliveries they'd made those first couple of days versus that original preliminary of 55,000 versus what then they reported. Anyway, bigger issue. One, if it had been 106,000 and we were on pace to do double what February was, which was already a record, this would have had major significant implications. But again, would have, could have, all that kind of stuff. If anything, April is pacing, maybe not quite as crazy as February, but it still reveals the cracks in the immediately available gold in size. When gold really started taking off in February, it was when the Financial Times reported that there were 4 to 8 week, delivery wait times in London. Should be like, a couple of days. So this tightness in size continues. We can always speculate as to why that is. But anyway, that mini crisis, mini mind-blowing thing from about a week ago, I think we can just chalk up to a data error.
Okay. Um, Changing sort of thoughts here, but still talking about gold. Something that I was reading is that right now, because of what's happening with the markets and the tariff policy, is that we're seeing margin calls on hedge funds. And one of the theories out there of what's been happening with gold, because we were above $3,100, now we're back below 3,000 at the time of filming, is that many of these hedge funds that are getting margin called, they have to turn to their most liquid things to sell during those periods. And that is often where we're seeing the selling in precious metals during
Mhm.
times of volatility. Do you agree with that?
I think almost certainly that's the case. We've seen, as we record this on Tuesday, today's pattern is just like it was on Monday. Big buying of physical metal during the Asian hours and even into London, gold's rallying. You get on the COMEX and straight down. So again, it looks to me like hedge fund liquidations. And it's not that we were at record levels of hedge fund longs or anything like that, but it was substantial as of a couple of weeks ago. And I guess if I were I don't know, I've never managed a hedge fund, as you can tell by this my surroundings, but I would think it's like any other portfolio. I mean, if you've held gold through the first quarter, you're up 20%. I mean, you're going to look to sell things that you're up in. You might also, if you're getting margin call or, you're selling some, S&P futures or something, because which is a now losing position, you might be able to offset those gains in that gold with these losses. You're generating losses. Hey, here's a chance to take some profits now. And they offset each other for tax purposes. So I think all those, to me, again, what do I know? But I would think those factors get considered in that decision. And again, but you can see it in the market. You can see it in the market volume. We'll get another today, another commitment of traders survey. They come every Tuesday at the COMEX close, and then they wait 74 hours and they give it to us on Friday at 3:30 Eastern. This week's commitment of traders report will reflect that. It'll be a big reduction in the large speculator and hedge fund net long position in gold. You'll see that for certain in this week's COT report.
So if anybody in our audience wants to start tracking that because they're interested in precious metals, what would they Google to find that?
Go to the CFTC website, Commodity Futures Trading Commission. I think it's just cftc.gov. There is a page on there, like a tab in the navigation bar that's like market reports or market information or something. You just hit it and drop down. And they post it there 3:30 every Friday. If, of course, there's a holiday on Wednesday, well, God forbid they can't do it in 2 days. It'll be on Monday, the following week when it's 6 days old. They The value in tracking the commitment of traders reports is really just from a historical standpoint, because obviously the data is stale. I mean, they could give it to us every day, I suppose, if they wanted to, but they don't. Um, I've got a stack. I don't know if you can see it back here. Looks like a ream of paper. This is a handwritten summary of every COT report since 2014 on my desk, so that I mean, most normal people might do that with a spreadsheet, Steve. Um, I just have it there. I can go back, just pick it up and look, see where we were in 2019. Like I said, the value of the COT report is having that history and knowing that, from the last time, the large speculative, the hedge fund position was this small, we rallied X amount, or vice versa. So that's how you can use those reports. And again, updated every Friday. See it at cftc.gov. And while you're there, maybe leave them a comment. Tell them, you tell them whatever you want about what you think of the COMEX.
So let's wrap it up from here. We're 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 looking at what's happening in the market. What's your viewpoint of where we're going here in the future? What are you paying attention to? What do you think is ultimately the direction of precious metals? Do you think that during this time of uncertainty, we're just going to kind of sit around that $3,000 level? It, are you willing to put your neck on the chopping block and make any predictions for us?
Well, in my annual, I don't know if you remember, I do an annual thing. I usually write around between Christmas and New Year's, and I put it out early January. I always write it down just so I can go back at the end of the year and see when I get everything wrong. At least I can go back and review what I was thinking that led me astray. For this year, I thought central bank demand would continue, and it has, and it is. And that's going to continue to keep a floor under price, and it will keep kind of running a pattern that you get in bull markets all the time. in gold and silver, kind of 2 steps forward, 1 step back. A rush of excitement, and then a consolidation, and then another rush to excitement. I thought we'd get north of 3,100 sometime this year, then pull back, and then how much further above 3,100 we get by the end of the year will be a function of, God knows what else is going to happen between now and Christmas. This to me looks, smells, acts like what we just went through in November. Trump got elected. I mean, before Trump got elected, we were at 2750, 2850 in gold, and everyone's like, yes, look at this. We're just rolling now. And just when everything looked great, and gold goes down 10%. But it was just a consolidation, a period of everybody, getting a chance to reposition themselves. That went on till after the December FOMC meeting, till about the 18th of December, double bottomed at about 2650 or whatever. And then next up move went. This looks a lot like that period, Steve. I mean, we fell 10%. Gold fell almost exactly 10% in that period from late October to the middle part of December. 10% here would take us down to maybe, 2,800-ish, 2,850. Okay. I mean, it wouldn't be the end of the world if that happened. That's what this feels like. Just another multi-week consolidation. And until that trend breaks and you start making lower lows and lower highs, I think you got to consider the trend your friend and just kind of let it play itself out.
All right. Well, Craig, thanks very much for hopping on here. It's always a pleasure when you hop on here. I know our audience loves it. And I think that we've got a really interesting, we'll say, few quarters ahead of us with everything that's happening in terms of the world order. And hopefully you'll keep hopping on here and giving us commentary on what's happening in the precious metals market, because I know our audience is definitely going to want some more food for thought.
I don't know why, but for sure. Call anytime. It's always fun to visit with you guys, Steve.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks for watching, everyone.